Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, let's just briefly go ahead and take a look at those good old crypto bubbles. We can see that my call of Ave just continues to pump and do well. We also see winners like a Quant just trouncing everything, and Matic, of course, pumping on the Disney news. Of course, with those Disney news, with that kind of news that delivers pumps, you have to remember there's often a retracement. So just to be careful, we all remember Rose Oasis Network. Uh, the suggestion that it was being adopted by Facebook, and of course, just all of those gains just went away, right? And so you see all of this red on the board. We are getting little of speckles of green here or there, which is kind of a good sign that we might be seeing more of a pump. But just remember the motto of this channel, right? Always be taking your profits, always be selling, guys, in a macro downtrend. Always take your profits, put food on your table. Don't collect these coins. These coins aren't going to be loyal to you. They are going to take everything away from you. Like, this market is relentless. It will take all of your gains away from you if you do not take your profit when you're in the green. Okay, don't wait until you're, minus 12 or minus 9 or minus, 7, whatever, and then you have to exit your position out of fear. Take your profit while you're in the green, and you don't have to take everything. You can leave little moon bags, but try to get your initial out of the market whenever we have a decent sized pump, and that way you can never lose money, right? Moving over to the S&P 500, you can see that today was mostly a red day, but the interesting thing is that the tech sector held up pretty well, and that's probably because it was fairly oversold. And so, of course, with the tech sector holding up just a little bit better than the rest of the market, that gave the opportunity for crypto to have a little bit of sideways action and to kind of be supported, even though we've been having that bad news of the CPI data, because of course crypto trades like tech meme stocks. I mean, it really is just the junkiest junk, the highest risk of the technology sector. And so when you have something that trades just perfectly correlated with the stock market, and the tech sector of the stock market is doing, okay compared to the rest of the market, then you're going to see crypto being flat. You're going to see little pumps in crypto, and that isn't to say that the market is healthy, it's just to say that the tech sector had a pretty good day on an otherwise bad day for the rest of the market. And so this is just how it statistically worked out. And if we do take a look at that CPI data, of course, this is what I've been warning you about. It does look like inflation is worse than what we expected, way worse than we expected. In fact, there was some hope that we had reached peak inflation, and it simply has not come to fruition, right? So we do not have peak inflation yet. If anything, inflation is accelerating, and Jerome Powell is still not doing his job correctly. I have no idea why he got hired by Donald Trump, and I have no idea why Biden kept him in power, but there is something very weird here, okay? He's not doing enough. He didn't start it fast enough, and this economy is now getting to a very sensitive moment where we're pretty much at a breaking point, right? Where we could tip into a very serious recession if the Fed doesn't get its policies in order. And moving forward to the information that we got today, the data that we got today, the PPI also is showing, heightened numbers, which is not good. That's a leading indicator that the next reports are probably going to be pretty bad for inflation as well, as we see producer price index final demand increasing here. And we do see that jobs are starting to be trimmed from the economy, but that's not necessarily a good thing in light of inflation increasing. What we would like to see is inflation decreasing and jobs just holding steady, because what we don't want is a recession to come faster than inflation. If a recession comes faster at us than inflation is coming at us, then the increases that the Fed is doing on the market, that the increases in interest rates that the Fed is projecting forward are actually going to end up deepening a recession, and the recession itself is what's going to fight inflation as the recession kills the economy. So, of course, I was bullish during the first half of the year that we could get through this if the Federal Reserve did its job right. But ever since the Trump administration, this Federal Reserve has just been doing a horrible job, and they have let down the American people. And indeed, they have let down the people of the world. I'll get more into this in the Macro Monday report that I'll be putting out next week. So let's just move along and see what are the risks here. The risk here, of course, is that the earnings reports that come in are going to be worse than expected, and that could indicate, also an increased chance of recession, as well as, problems that need to be solved and cannot be solved through recession or increased interest rates. If earnings reports continue to go down, then the market has to downgrade the price over earnings ratio, and so we're not going to be seeing this lovely, 16x, that lovely 20x that we've seen in the past when the markets were super overheated. We might end up returning to 10x's or maybe even an 8x. And this could absolutely destroy the stock market over enough time. Okay, it won't be right away, but over enough time, the market may overshoot the return to the mean, and we could have a very negative cycle for a while. So watch this space. I'll continue to keep you informed, and we'll go into more details on Macro Monday. Just heading over to the charts, as I said, the tech sector of the stock market held up fairly well today in the face of the rest of the market having a red down day. And I think that's probably just investors cycling their money through the various sectors. Of course, tech did take one of the biggest hits up front. And so it would make sense that if the rest of the market is now going to be taking their hit as commodities are kind of sinking, a few other sectors are finally sinking after having, various timings, right? Now money is flowing a little bit back into tech, which can help, stabilize Nasdaq and stabilize crypto, at least temporarily. That does not mean that it's necessarily permanent. It could be just a couple days, actually. So we really have to watch this space very carefully. Otherwise, you could be in for some nasty surprises as the market is starting to believe that we're reaching a bottom. That bottom has not been confirmed yet. Again, we'll go more into it in Macro Monday. But for now, we do have some hope because we are pumping. And as I told you in the previous Trading Tuesday video, that we're likely to continue to follow this path that I've been laying out for the last couple weeks. And sure enough, what was the standard that I set? That we would need to hold $19,500. And in fact, we did hold $19,500. This was a little fake out. If you look at that little fake out, it appears on maybe a smaller time frame to have actually carved out a little head and shoulders. And that little head and shoulders pops us all the way up to 21,000. maybe as high as 800. So 21,000, let's just follow our downward resistance slope. 21,000, maybe 700 is quite reasonable. If we break above that, I mean, of course we could wick, right, on some of these lower time frames, like maybe the 4 hour or whatnot. But, if we had a daily candle close above that downward resistance, that would be an incredible change in our, a trend. That would be a break in trend. And of course, it would then be up to us to put in a higher low and to potentially continue that relief rally perhaps that could set in as we find a temporary bottom in the market, one which I've been speaking about for several weeks now as being a strong possibility. Go ahead and look at the Trading Tuesday video that I put out earlier this week and the Macro Monday video, and together you'll get a pretty good idea of the best case scenario. As for these shorter time frames, of course, I did mention at first, the first pump would likely take us to $20,000. It took us to $20,600, where we got a bit of a rejection, and then we put in our higher low. And after that, of course, we had the real pump, which I was suggesting could take us all the way up to 22,000. That pump was not super vertical the way that it was on this previous fractal. If we kind of take a fractal of this area, it's very similar to the pattern that we put in down here. And so those pumps were very vertical. That's why I suggested we could go perhaps as high as 22,000. However, this slow and steady is actually a better sign than just these institutional God candles, right? Because these things are highly manipulative, where these type of steady pumps, it's a little bit more organic for the market. And this is actually a very good sign when you see this type of healthy breakup after a little bit of a fake out, just kind of liquidating the bears, right? Liquidating the bears terrified about the CPI data, while money is being cycled into the tech sector, temporarily, and that's the key word, temporarily being cycled into the tech sector, right? We see this kind of lovely little pattern here, which you could probably see better on the 4 hour, where you do see this nice kind of trend, downtrend reversal kind of pattern here, this kind of bullish confirmation, where we did get a nice pop up, and we do have this momentum to the upside, just just threatening to reach the top of this channel, where we may be met with resistance and have a dramatic drop down later in the week. So again, guys, if we reach resistance, please take your profits. Please, sell part of your position. Not financial advice, but I'm just saying, we're going to be reaching a resistance that we have been suppressed under for a very, very long time. If we do break out of that resistance zone, then perhaps we could be talking about those numbers, like perhaps even $23,000 or perhaps $26,000, and we can discuss, potential targets from there. But at first, let's just deal with this first boss and just see if this head and shoulders can play out. Maybe we get a wick above our resistance, but let's see if we don't get, smashed back down as stocks perhaps eventually rotate out of tech, weakening the tech sector, and that would drag crypto down with it. Okay, we're all just waiting to see how the market is going to absorb that Fed data, And as you can see on the screen, I've marked down the typical periods that it takes for the market to absorb new data, whether it's CPI data, PCE data, or PPI data. The market tends to take it in clusters, and it takes, here it took 25 days, 23 days, 28 days, and and the Fed decision is going to be 23 days after that period. So we could have perhaps a rejection to the downside, at any time where we start curving down, perhaps in this type of a fractal where pardon me, where perhaps we just kind of repeat this sort of pattern, and maybe we're doing a little pump up, we meet resistance, we can't break the resistance, the economic news is perhaps too bad, and then we stream down. And then what would that align with? That would align with the Fed's decision, and so the market would bake in, right? The market itself would bake in the potential Fed policy if it believes that the Fed is going to be harder on the market than the 75 basis points of the previous increase, or if it believes that the Fed is perhaps going to have to increase interest rates for a longer period of time, then the market will likely self-correct to the downside. But as I mentioned, the market usually takes 25 to 30 days in order to make that decision. And so far, we are only 13 days into it, okay? So since we're only 13 days, you can expect that, we could take another week and a half to decide what we're going to do, what the market's going to do. And so we could potentially drop at any time. It's not related to when the Fed makes its decision, it's related to the data points. The data points are what the market reacts to. It does not react to the Fed's decision. It reacts to what the market believes the Fed will have to do over time and what the market believes is going to be the state of a recession. All of that needs to get priced in. And as we were talking on previous episodes and earlier, of course, we do have these earnings reports that are going to start popping up, July 28th, right? July 28th, July 20th, July 28th, July 27th, right? July 29th, right? All of this new information is going to come in, all these earnings reports, and if it's worse than expected, that could be a catalyst for the downside. In the meanwhile, the market may just want to enjoy a little bit of chop before there's a potential drop. Of course, there could be a pop if we do find a potential bottom, and if the market determines that perhaps those earning reports were more solid than it expects, then maybe it would downgrade the considerations for a recession, and perhaps the market would turn a little bit temporarily bullish. But right now, I am biased to the downside. That doesn't mean it's a strong position. In the very short term, I told you I was bullish to $20,000, and that if we were able to hold on to 19,500, that I would be bullish for this fractal to play out. And then at this decision making point, we could either prove that we're going to go up or we're going to go down. And so I wouldn't necessarily be in the market at that key moment. And so, you guys who are playing these highly volatile ends of the moves, that's up to you. But for me, I think I'll just wait and see what the market decides, and then I'll buy in on the confirmation of the move rather than trying to, pretend that I can process all of the details in my mind, like some type of supercomputer. Doing a pretty good job, but no one's perfect. So I'm just going to wait. We had a lot of nice, good trades during the last couple weeks, and we're now at that point where it becomes a little bit risky, right? So let's go ahead and just leave this on temporarily because, again, we do have that target perhaps as high as 22,000, but perhaps limited by that macro downtrend. And just as part of a request, I did get a member of Alpha Commission who wanted to request ADA, and I have looked at ADA before. This chart's going to be a bit sloppy, but as you can see, ADA is just an incredibly weak chart. This doesn't, this is just pure distribution. It's just pure raw dumpage, and it looks very ugly. If you were to look at this area right here, it almost looks identical to this area right here, right? Where you had just this kind of chop down, right? This kind of downward, distribution triangle, and then you broke down below it, you kind of popped back up into it, faked out, and then had a massive dump. It looks like you're doing something very similar over here, where you have just kind of this distribution triangle where it's just leaning towards the bottom of the triangle. You kind of broke out, but you're faking out, here, and are you faking out up here, and are you going to, just dump? Um, you know, it looks like that's possible, but if the rest of the market turns bullish, if the tech sector of the Nasdaq manages to hold up against the rest of the market, that could allow Bitcoin and crypto to just go sideways or to pump a bit, perhaps in a relief rally, perhaps taking the rest of the summer months even in a relief rally. We can talk more about that in Macro Monday. But of course, ADA itself just left to this kind of pattern, which we also see this head and shoulders, which would actually have a measured move to the downside, to be honest. All right, I don't know what it's doing right here. There seems to be a couple oppressive lines, right? It just depends if you ignore the top of this wick or not. But, and so those oppressive lines kind of end in these two areas, which coincidentally line up with the rejection areas that we're seeing. And ADA just doesn't seem to have, enough energy to really break up above it. And so what I would want to see for a bullish ADA would be for this Cardano to basically get above this triangle, get another kind of like a U pattern here, maybe make this kind of inverted head and shoulders and have a perhaps a measured move to the upside up here, and then hold this level, right? Even if it makes a higher low or something like that, if it has to. Um, so basically, I'm not interested in this unless we can see this type of bullish formation being put on the charts. Um, it's just, I've seen this pattern before, and it just broke down from there. Where would I target ADA to the downside? I would suggest that, first of all, we're in a pretty juicy area. This thing has just been demolished, and so it's already passed the 786, and it actually tagged the 886. So I don't know, like these are pretty safe areas, right? It's about 85% down. Uh, I would like to see coins at least 90% down if, I'm personally going to DCA into anything. I would like to see it significantly down and having, you know, a good social following like Cardano, ADA has that, this is a safe coin for perhaps the next cycle. But you know, it looks so bad that I'd rather buy it at these lower levels, like 25 cents or 17 cents, which I think it could potentially drop to if this market has more bearishness in it. And I don't necessarily want to be holding ADA in this area. If the market continues to drop and then goes sideways, I'd rather just be patient and wait for these lower levels, like 25 cents or 17 cents, as opposed to this 45 cents area, right? Does that mean that we couldn't get a nice bounce? No, of course, the entire market is kind of looking for bounces right now. If we look on the daily, uh, yeah, I mean, our volatility is pretty low and probably will have some type of pop-up pretty soon. Maybe I should look on the weekly. I mean, it's just overall bearish, but this thing is starting to get really cooled down. It's definitely not overheated anymore at all. And so again, we are entering those safe areas to DCA. Again, this is one of those safe coins that very likely will be around in the next cycle. So if you wanted to take a risk on it, I mean, that would be up to you. Personally, I don't see any type of bullish reversal on it yet. I do see its weekly MACD threatening to, actually, it is crossing positive. So, I mean, that's a good first sign, and I would just like to see this trend perhaps grow stronger than this little baby one right here, right? So continues rising above 38 and a half cents. I do believe we're above 38 and a half cents. And how about the Stokes? The Stokes is still pointed to the downside, and it needs to see 48, and 2, basically 0.482 before it's going to turn up on the weekly. And so we're 0.440, so we're about 4 cents away from this thing having a bullish reversal potentially on the weekly. And I wouldn't mind waiting to see if we could basically take out this 48, 49 cent area, and if we could, then potentially I would be interested in, taking a look at ADA again, right? When we reach, let's just say 49 cents, right? 49 cents, I'll take a look at ADA again. Otherwise, I'm just going to be waiting for it to potentially test this 25-cent area. And, you know, I'm more interested in ADA around 17 cents, just personally, because there are other coins out there. But at 17 cents, it would be looking pretty good to me. And there's even numbers lower than that, right? Like 10 cents or even all the way down to 20 cents, right? It's possible this thing could get fully retraced, but we're still a ways away from there. So to the person who requested ADA, Cardano, that's kind of just my thoughts on it. You do see these pretty nice pop-ups when we do return to the trend line, but what you can see right here is that we're at the trend line. And so whenever we're at the trend line, we tend to get rejected. And so being at the trend line, I'm not sure if we're just going to break down or if we're going to manage to get over that 49-cent area and start putting in higher lows. So that's really what I'm going to look for. And again, just in case you don't really see it, there is this kind of diagonal right here, which is part of that distribution triangle pattern here. Um, and we're underneath it, right? So like we had a triangle, and then we broke down into basically an even worse triangle. But if we get on top of that triangle, you can see there are nice bounces off of that triangle, off of that line right here, this one. Even though this is a rejection line, this is kind of a bounce line if you can get accepted by it. And so, yeah, I would probably put that standard at 49 cents before I got too excited about a Cardano trade. I would just probably be looking for more downside, to be honest. And the whole market is starting to bounce right now, but ADA is really it's it's not bouncing at all. right? It looks ugly. It looks like it's going down when Bitcoin, you know, when Bitcoin looks like it's at least going sideways and is kind of at the top of its channel there, right? Switch to the daily. Bitcoin is, at least over the middle of its current range, whereas ADA, let's see, where was that one? Where ADA is, really at the bottom of that range, struggling to hold on to it. And even here, it's getting a little bit of a rejection. So yeah, I need to see it do something like this, right? Maybe something like that. And then if we can hold that 49 cents, right, kind of take out that area, then I'll take a look and see what it's doing, right? Maybe it's going to make some type of head and shoulders kind of pattern, right? Something like that. They could potentially take it up even higher. But until then, not going to touch this one personally. Um, I hope that doesn't disappoint you guys, but that's my opinion on Cardano. All right, guys, that's your alpha for the day. Stay safe and happy trading.